Hey, this is Garrett Goggin with Golden Portfolio. We're excited to bring you Rudi Fronk, CEO of Seabridge Gold. And we've been following Seabridge for many years here at Gold Stock Analyst, now with Golden Portfolio. And at Golden Portfolio, we seek to align ourselves with value creators of the industry. And I look at the shares outstanding of 90 million shares outstanding. Rudi's been able to maintain a low share count while drive significant amounts of value based off their latest KSM economic analysis. It's looking like a $14 billion asset at today's gold price. Like it's amazing the value that you've been able to drive, Rudy. And, that's one of the reasons why I like you so much.
Well, thanks, Garrett. We've known each other a long time, and I look forward to seeing what you can do with this new publication.
Thank you. Speak to me about the value creation with Seabridge. How have you been able to do that?
You know, sometimes I have to pinch myself looking back. How the heck did we put this asset portfolio together? And over the last 25 years, we launched the company 25 years ago this month. So it's been a long time in the making. But to look back and think that, so when I took over this shell in October of 1999, it had zero cash in the bank, 17 million shares outstanding, and a 10-cent share price. And our goal was to try and create what we thought would be the industry's best leverage play to a rising gold price. And our simple guiding principle over the years was to try and grow ounces in the ground faster than shares outstanding. The thought being that the more gold you can provide on a per share basis, the better your share price should do. And if you look at our historic performance since day one, the gold price is up about 800%. Our share price is up over 8,000%. So we've outperformed the gold price by about 10 to 1. I think our success is doing what others don't do. If you look at the industry as an industry, serial diluters, not just the junior companies and the explorers, but also the senior companies, they continue to issue more and more shares without offsetting that dilution with value. And our simple test is, will dollars spent grow ounces per share? And if it doesn't, we're not gonna do that deal.
So yeah, I see the same thing. The serial value diluters, I see the majors, their shares outstanding continues to increase. All they're concerned about is keeping production constant. So bankers and management get paid and shareholders get left in the dust. The major share price, the price of gold's gone from 300 to 2,500. The majors share price is trading at the same price as it did 20 years ago. It's ridiculous. But as far as value creation goes, so you got about 70 million ounces of gold equivalent. So it's like a dollar. You get per share, you get an ounce of gold. Is that correct?
Yeah, actually, it's a lot more than that. If you actually look at our total resource base, first of all, I'm not a fan of gold equivalent.
Yeah.
I don't think there's anything equivalent to gold. These companies that take copper and talk about it equivalent to gold, it's a completely different metal, completely
Mhm.
different market that it trades in. If you look at Seabridge today, our reported gold resources, measured, indicated, and inferred, is 183 million ounces of gold.
Inferred. Yeah.
It's 59 billion pounds of copper, and it's 900 million ounces of silver.
Mhm.
And when you basically apply that to the 90 million shares we have outstanding, at today's metal prices, buying a share of Seabridge, you're getting over $7,000 of metal value in the ground today per share. And our shares are trading at about 17 bucks a share.
Yeah, yeah, yeah. It's incredible. You have the largest resource base out of any company in the whole sector, including all the majors. You could almost add all the majors together. It won't even add up to Seabridge. So the main value driving, do you see it as being paying the right price for assets?
Yeah, yeah. Look, I think the value driver to our shareholders will come from getting a transaction done on KSM. KSM sits there as the largest undeveloped gold and copper project in the world, not just in terms of resources, but also in reserves. It's a project that's beyond our capability to build. I've talked about a joint venture for a number of years. It hasn't happened yet, although we have had a number of proposals over the years. When a transaction happens, I think we start to unlock value very quickly because then there's a path to first production. And it's as you move to first production to start to get the metal out of the ground that you really start to get the value that we're not achieving right now.
No doubt I've been following that and I've been trying to model a couple things recently. Your CapEx for the project, 6.4 bill. If you sold 30% of it, right, at 1.9 bill, that would cover your CapEx and leave you retaining 30% of the property. Am I thinking along the right lines as what you're thinking?
Yeah, we're not looking to sell a portion of KSM. We're looking for a partner that's willing to come in and spend the dollars first to complete a bankable feasibility study, and then make a construction decision, and then fund the development of the mine. Our goal is to hang on to somewhere between 35 to 49% of the project without having to come up with anywhere near 35 to 49% of the capital. Um, when you look at this mine at today's metal prices, when up and running, this project will generate well over $2 billion of free cash flow a year. If we can keep 35 to 49% of that cash flow on an annual basis, give us a multiple on that. Look at our market cap today. Our share price is going to go up multi times by getting that value in a joint venture. And that's our focus.
Right. Now, the economic analysis that you did for KSM, what percentage of company value do you see that that contains? Because I know you've got a lot of other assets that you're developing as well.
Yeah, great question. I think right now all the market is focused on for us is KSM because we have talked about a joint venture for a number of years. We did just spend a lot of dollars to advance the project to get the substantially started designation, which means that the permits we now have in place don't expire. But I think in the marketplace today, we're getting all the value comes from KSM. I think as we unlock value through a joint venture, the market will then start to focus on, oh, wow, these guys did get it done. What else do they have in the portfolio? Like Courageous Lake, for example. Courageous Lake is an asset that's been sitting there in a portfolio since 2002. Only now are we getting back to work on it. And our recent pre-feasibility study we did on that shows another project that could produce upwards of 200,000 ounces of gold a year for about 30 years at an all-in cost of production of about $1,000 an ounce. And right
Yeah,
now, I'd say there's nothing in our share price for Courageous Lake at this point in time.
yeah, exactly. Like, yeah, it's all everyone's looking at KSM, but you have other stuff in your portfolio that's worth a tremendous amount that's not even being valued. Would you see those assets if and when a potential acquisition or merger, you would spin those assets out as a share distribution or something to a new
Yeah,
co?
I think so. I think that's always in the back of our mind. Right now, the focus is to get the joint venture done. There's no doubt in my mind, Garrett, that when the joint venture is done and the company that we've partnered with is advancing the project to a construction decision, they're going to want the whole thing. So maybe at that point in time, there's a buyout of the company, Seabridge, for our interest in KSM, but that would give us an opportunity to spin out all of our other assets into called Seabridge too.
Yeah, yeah. I love all the free stock distributions. It just adds a tremendous amount of shareholder value. And I know you're aligned with shareholder. How much of Seabridge do you own?
Too much. I've got 95% of my family's net worth in Seabridge common shares.
Yeah, okay, there you go.
Yeah, so yeah, this is my future as well.
Yeah, that's your baby. And the thing about KSM, like it's got a 30-year mine life. It's huge ounces. It's huge free cash flow. You've been building this for 25 years, but have you seen a better time for the prospects of KSM? It's like it seems like everything's coming together here.
No, our stars are definitely lining up. First of all, metal prices, both gold and copper. Yeah, maybe copper hasn't performed to the extent that we think it will, but gold has. And I think gold's still going to go a lot higher. You're in a world where there's not a lot of big projects available for the majors, and they all acknowledge that they need big projects, either from the gold side or the copper side. And here we sit with a large project that's permitted, ready to go, construction already on its way in terms of the work we've done there. And so there's never been a better time to get a deal done. And I'm confident that with where we sit today and how the market looks, that we'll get the deal done.
Yeah, I just look at the majors right now, right? And they've been since 2011, the last peak, they've been paring down assets, repairing their balance sheets, selling off assets. Newmont's still selling assets, and their production profile is declining, right? For the majority of the majors. And
Yeah,
it,
so we track that kind of stuff. You look at the relative performance of Seabridge to the gold price, but also to other gold companies, especially the majors. The gold industry as a whole has really underperformed the gold price in a meaningful way. I spoke that since we began time, our share price is up 8,000%, the gold price is up 800%. If you look over that same time period, Barrick's share price is only up about 30%, with the gold price up over 800%. And you say to yourself, how can that be? Well, if you look at their share count from, say, 2007 to the present, it's more than doubled. Yet their production has gone from 8 million ounces to 4 million ounces, and the reserves have gone from 125 million ounces to 77 million ounces. So when you think back in terms of per share metrics, production per share or reserves per share, they have destroyed shareholder value. And it's no wonder their share price hasn't performed the way investors would expect a gold equity to perform.
Yeah, no doubt. I'm out there a lot on Twitter and, LinkedIn and stuff, and I see a lot of, gold research analysts, and they point to the price of gold and they point at the GDX being extremely low, and they call it a valuation gap. It's not a valuation gap. Like the majors are fairly priced for a reason. Why? Because they've diluted a tremendous amount, and everything has to be looked at on a economics on a per share basis. And that's why I started the Golden Portfolio and focus on royalties and the smaller explorers, developers, and miners that are focused on growing economics on a per share basis. And that's another reason why I like you. You stated very clearly in your presentation, and your results speak louder than words.
And we've been consistent on that point for 25 years.
Yep. Yep. Okay, I think that's about it, Rudy. I think we've hit all the major points. Is there anything else you'd like to share?
No, just I'm excited about where the company sits today, what our future looks like. Obviously, a joint venture is probably the most important aspect to get done here in terms of work in front of us. Moving forward with Courageous Lake, but something that we just announced the other day was a major discovery at our Iskut property in British Columbia. We bought that project in 2016 when gold equities got decimated again after being a lot higher in 2011, 2012, thinking that there could be another KSM there. And the more work we've done now just reinforces that. So we announced three drill holes the other day that actually intersected anywhere from 300 to 500 meters of continuous mineralization fairly close to surface at grades that are pretty close to what our reserve grade is at KSM. And we still have not yet hit the prize there. So we're really excited about that one. Imagine bringing a second project like KSM into this portfolio, starting exploration all over again.
Yeah, it's amazing. It could be one big copper porphyry. What do you pay for Iskut?
Oh, I think we issued 700,000 shares, back in 2016. So it was, and on the front end, we got a 2.2 million ounces on a small resource that was there called Bronson Slope. We've already increased the Bronson Slope resource by over 3 million ounces.
Yeah, so it was probably
Seven, yeah,
two
so the
million or three
700,
million dollars
yeah,
value for this potential value of God only knows how
yeah.
much.
Yes, we're up over 5 million ounces already at Bronson Slope.
Yeah, yeah, excellent. All right, Golden Portfolio, Seabridge Gold. It only has 89.8 million shares outstanding. It's trading at $16.50. Based off the economic analysis for KSM, it's worth $14 billion at 2,500 ounce of gold, which leads to a target price of $46.50 for Seabridge. Just the value's ridiculous, and it's only trading for $16.50. So, Rudy, thank you for joining me today. We'll talk soon.
Garrett, appreciate it. Great seeing you again.